community and resident of the Washington region, you understand the importance of Metro in keeping your company and the entire region economy strong. With 91 rail stations across Maryland, Virginia, and DC, and more than 1,500 buses operating on the 325 routes, Metro provides critical transportation for the region. Metro could not provide these regional benefits without the business community support. You provide with the tools and the services needed to keep the system running. So we rely on companies like you to assist us with functions like IT, bus, rail maintenance, new construction, real estate, and everything else that we need out there. So I would like to thank you for being here today. But at this time, I would like to introduce Michelle Howard, who is the director of Metro Small Business Program Office, where she has an oversight of our 5 socioeconomic programs, which she will tell you a little bit more about. I also want to take this opportunity to thank her and her team for doing such an amazing job with all of our outreach activities each year. Whether hosting or participating in external events with our business partners, they keep Metro's brand moving forward and in the right direction. So thank you very much. Thank you, Michelle. Thank you, the team. So I'll hand this over to you.
Thank you, Fifi, so much. Hey, you know what? I'm always happy when she can join us, guys. Oh, she's such an amazing leader for us. And we are doing so many great things under her leadership to help small businesses. So, Fifi, thank you so very much for everything that you do as well in supporting us. So good morning again, everyone, and thank you for participating in today's WMATA Small Business Programs Office Outreach. So today we have for you Shielding Your Success, a holistic approach to financial fitness, health, and protection. Please always remember at WMATA, certification is the key to participation, and we encourage all of those not certified small businesses to please get certified with WMATA. We have 5 socioeconomic programs that you can be certified in. Most of you already know about our DBE and SBE programs on our federal program side, but do you know we also have our non-federal local programs? We have minority business, small business, and micro business programs that you can be certified in, and we welcome you to come and be certified with us. So please check out our website and learn more about our programs. We are definitely open for business, and we want you to be a part of our contracting opportunities. Don't ever forget, we are your Metro, the way forward. Also, remember to please put all of your questions in the chat and to fill out our surveys that will be sent to you after the outreach event. These surveys, they help us to plan events that can benefit or support your business growth. So thank you, and I really hope you enjoy this amazing session. Today, as your presenters, you will have Ms. Pauline Tieko. She has been a financial literacy advocate for over 27 years and officially became a financial advisor over a year ago. Her previous career was 25 plus years of experience in the transportation industry in strategic planning and change management. Our other presenter is Philip. Philip is a financial advisor and educator devoted to empowering individuals, families, and businesses in reaching their financial objectives and establishing a secure financial footing for the future. Philip has guided numerous clients through pivotal financial milestones from retirement planning to college funding, using strategic insights and personalized strategies to ensure financial security. I want to welcome both of them today, and I want to thank them so much for being here with us and presenting this great information to you. So at this time, I'm going to turn it over to Pauline and Philip, and I will see you guys on the other end.
So much, Cheryl, for the wonderful introduction. Good morning, everyone. My name is Philip, and with me I have my business partner, Miss Pauline, and I'm super excited for being able to present today around the workshop on shielding your success. I'll go ahead and share my screen, and you will let me know with a thumbs up if you are able to see my screen. All right. Can everybody see my screen?
Yep.
Okay. So we will start with preparing with proper protection. And as part of that, before we get into anything, I always like to, go through a disclaimer. Hopefully this thing works without any hiccups. So the information in this presentation, I don't want you to interpret this as any accounting, investment, legal, or tax advice. And we're not offering to sell or soliciting to buy any securities, any insurance, or any other financial product. This is strictly for educational purposes only. And as part of our campaign, we want to truly bring financial awareness and education to 30 million families by 2030. Truth is, you will not learn everything just in this workshop, but we do hope that you will continue to learn and gain more confidence and also take action towards reaching your financial goals. Being part of our campaign, we do encourage everyone to help empower others to do the same. As you learn, it's only right for you to take it and educate others. And to preserve integrity and also the context of the information today, please do not take any photos, video, or record this workshop. Nobody ever listens to that part, but I still have to say it anyway. So every single day, every one of us, whether you're on social media or not, you will receive a text message. If you go on Facebook, Instagram, Snapchat, TikTok, you have so many people offering financial advice. And a lot of times, most of these people, they don't have any licenses or they don't have any industry experience. And too many people from the old traditional industry, they focus on just one or two aspects when it comes to, our finance. We make sure that we look at the holistic picture. We take an approach that addresses every area when it comes to our finances, whether it's from a business perspective or from a personal perspective. And our workshop, we help to educate and also empower everyone to become their own money manager, whether you're a business owner or just an individual trying to get your finances in order. Once you start taking control of your finances, you start controlling your future. So our agenda for today, we'll start with preparing with proper protection. Some of the things that you'll learn. Number one, we'll discuss on the X-curve concept, and we'll look into why proper protection is the foundation when it comes to building wealth. We'll also look at the value of properly protecting your assets and liabilities, and then we'll talk about how this benefits your overall financial strategies, and we'll also look at some common questions and mistakes that people make. The second part of what we'll cover today, we'll look at your health and wealth, how they intersect. Some of the things that we'll learn, we'll look at the importance and impact of your health, strategies to help you transfer and also preserve the wealth that you worked hard to build, and how you can ensure that your last wishes are properly prepared and implemented. Also, we'll look at understanding the inevitability and impact of medical expenses. So, to start off, I'll let my colleague, Ms. Boleen, you'll go ahead and I'll stop sharing if you're ready.
Yes, I am ready. Can you see my screen?
Yes.
Okay. All right. Alrighty, so the first thing we do is we ask each individual as well as a business, where are you financially, right? Are you at the beginning here where you have a lot of debt and you have a responsibility taking care of your family and taking care of your business? If that's where you are, then you understand that the goal is to protect yourself if you die too soon and protect yourself when you live too long. So the goal and what the S-curve does is that it has two different facets to it. In the beginning, where you have the debt responsibility being really large and you're in a position to earn the money. And then you also have the debt responsibility growing smaller and smaller as you grow older and older. Right? And then you have the ability to earn a lot more money when you're younger. And with that money, as you earn it, it's going to be able to suffice and help you take care of withstanding the inflation that comes with it, risks that come with it, and take you over to the other side where you get to financial independence because you have been able to accumulate enough wealth to be able to help you with taking care of your golden years. Right? So when we look at the X-curve concept, right, there's decreasing responsibility And then generally you become less secure, right? When you're younger, you're taking care of your family. And then as you grow older, you're building your wealth, you're more secure, and now you're able to take care of your future. So based on this X-curve concept, we're going to be a little bit interactive here. So we'll give you about 3 to 5 seconds to answer on the chat. And Philip, if you could help read some of the answers there. According to the X-curve, you should wait until you pay off all your responsibilities before building wealth. True or false? Any answers yet?
Yes, we have about 5 false, actually a lot of false.
Okay.
Yes.
That is true. Very good. According to the responsibility curve, you have more responsibilities when you're older. True or false? Give another 3 more seconds. Philip, please help me with the responses.
Yeah, we have answers pouring in. There's one true, there's a second true. So there are a couple of false, and it's almost a fair divide between the two. There's a true and false.
Thank you for being interactive. The answer is false. Last but not least, generally, when we are young, you may have enough wealth to take care of your responsibilities. True or false? Go ahead, Philip. Anything come up?
We have very false, we have true, we have false, so all the way false. So
we have a good job today. Thank you for being interactive. And the answer is false. Thank you. Mm-hmm. When we look at proper protection, we have to find out what are the most common things that most people insure, right? We look at your vehicle, their life, their phones, their wedding rings, their homes, vacation, their pets and their property, right? How do we protect our responsibilities or our assets? Have you ever had or purchased a warranty? Insurance is a means of protecting from financial loss. It's a form of risk management that provides a guarantee of compensation for a specified loss, damage, illness, or death. Right? Now that we insure all these things, many people tend to forget to insure the greatest assets, themselves. So life insurance in itself is a way to protect your family from the burdens of financial responsibility based on your needs and your goals, right? And in exchange for premium payments, the insurance company provides a lump sum payment, which is sometimes referred to as a death benefit, to beneficiaries upon the insured's passing. So please indulge me while we watch this little brief video here and listen to what they have to say.
We're not hearing the video. I think you needed to share with the audio.
Okay.
Oh, you have to stop sharing and then reshare, or you can just read through.
Okay, this is a matter of perspective. Hello, I'm your life insurance policy. You and I have similar purposes in this world. It is your job to provide food, clothing, shelter, schooling, medicine, and other things for the ones you love. You do this while I'm kept in a safe place. I have faith and trust in you. Out of your earnings will come the cost of my upkeep. At times, I may appear insignificant to you, but someday, and who knows when, you and I will change places. When you're laid to rest, I will come alive and do your job. I may provide food, clothing, shelter, schooling, medicine, and other things your family will continue to need, just as you're providing now. When your work and labor are done, mine will begin. Through me, your hands can carry on. Whenever you feel the price you're paying for my upkeep is burdensome, remember that I can do more for you and your family than you will ever do for me. Knowing how a policy like me works will help you understand my role in your overall financial foundation. Together, we can help protect the future of your family. If you do your part, I will do mine. Sincerely, your life insurance policy. Now, what other purposes do we use insurance for, right? And generating our wealth. We can use it for charity, estate preservation equalizer. We can also use it for business planning, creating wealth where we create an inheritance that's more than you could possibly do by just saving alone, right? So for clarity understanding, right? Like anything not frequently talked about, there are misconceptions, myths, and a general lack of understanding, right? These are some of the questions that come up. Why is it so cheap? What type is right for me? What am I getting? Who benefits? Why is the quote so high? The options tend to be overwhelming. Sales tactics create pressure. And who likes talking about dying anyway? But today, you'll clearly understand why life insurance is the most important. So the first thing we'll attempt to do is understand how the premiums are determined. Cost of insurance or rate is generally determined but not limited to this criteria: age, weight, health issues past and present, medications, tobacco use, family health history, driving record, high-risk activities. Are you scuba diving, auto racing? And the biggest question is, are you still insurable? So which of these items are not factored into insurance rate premiums, right? Go back to interactive participation. Give you about 3 seconds. Which ones of this are not factored into insurance rate premiums? Driving record, height, auto racing, hair color. Philip, do we have any responses?
Yes, we have hair color. Yeah, a bunch of people say hair color.
Yes, that is truly correct, right? What about this other set? Past health issues, religion, family history, or tobacco use?
We have religion, multiple religions.
Oh, wow, you guys are really paying attention. Thank you for that. And here's another set: eye color, prescribed medication, riding a bicycle, weight.
We have eye color.
Very good. Nobody was riding a bicycle, right?
Yeah.
All right. So one of the things we do is we want to make sure that you're taking care of your family. And how do you take care of your family, right? So what we do is we use a certain method called the DIME method, and DIME represents debt, income, mortgage, and education. So we have a hypothetical case here for a client, right? This client has $50,000 of combined credit card loans and other types of debt. They make $3,000 a month, which is $36,000 a year. So the income replacement for 10 years would be that $360,000, right? And you look at their mortgage balance, it's $200,000. And education, assuming it's $50,000 per year for a 4-year college for 2 kids, that totals $120,000. So in this particular case, they need protection of $730,000, right? So the other question we ask, are you insurable, right? Some of the statistics we have from the Cancer Organization says that in a lifetime, the risk of men and women developing cancer is 1 to 2 in men and 1 to 3 in women. Whereas the risk of dying from cancer in men is 1 to 4, whereas for women it's 1 to 5, right? And it's also estimated that 80 million Americans have one or more types of heart diseases. Can you imagine that an average healthy couple, right, in retirement will need $200,000 to be able to take care of their health care? Now, if you put a nursing home in there, it skyrockets to $500,000. That's $500,000. And these are statistics we're looking at from as far back as 2012 all the way up to 2015. Now it's even more. And then 70% of the seniors will need some form of long-term care in their lifetime. It's very appalling that these are the numbers that we're dealing with, right? But once we have the DIME method here, we're able to calculate the family protection based on their life insurance need, right? So let's say now, for example, you buy insurance and you have enough coverage for potential loss, right? No one would likely buy $100,000 coverage for a $50,000 home, right? Or $20,000 coverage for a $50K vehicle, right? So when we look at life insurance, right, we need to make sure that we have the right attachment to the need that is there, right? So these are some of the steps that we look at here, right? You use the DIME method to find out your individual protection need. And this also is something that you can also use for your business, right? Looking at it to make sure that you are covering your business with the need that is there. Now, one of the things you have to understand is what tax bracket you fall into. This is from looking at the 2024 tax year brackets, whether you're single or married. Depending on your income, you'll see what your tax responsibility is. Is it 10%? Is it 37%? Is it 24%? Right? And go back one more here. Did you know that the lowest tax burden in the states is actually in Alaska? They only pay 4.9%. And the highest is 12% in New York. And these are figures as of March 2024, right? So it's so amazing that different states have different rates. Did you know that California only has 10.4% is the tax burden you have to pay on personal income? Alrighty, so then we look at the bigger picture here. The bigger picture is understanding how our money gets taxed, right? There are 3 buckets according to the IRS code and the tax laws where you can put your money. The first one is what we call the tax now, and examples are bank accounts, CDs, certificates of deposit is the official name of it, stocks and mutual funds, right? And how you get taxed there is based on capital gains. The next bucket is a tax later bucket. This is, for example, for your 401k, 403b, your IRA, the SEP IRAs, annuities, and pension plans. These are pre-tax dollars, and you can put them in this bucket here, right? And the third one is the tax never or the tax advantage. And examples of that are Roth IRA, municipal bonds, 529 plans. And these are post-tax dollars. So basically what that means is that you only pay tax in the beginning, you don't pay taxes later, right? Now, out of curiosity, most people know about the Roth IRA. Can anybody share on the chat what you think the maximum is to put in a Roth IRA if you're below 50 and you're above 50? I'll give you like 3 to 5 seconds to answer that. Philip, please help me in the chat.
Yes, I'm monitoring. So we have $23,000, $20,000.
In a Roth IRA?
Yes.
The actual answer is $7,500 if you're under 50, and because if you're above 50, they're giving you a chance to catch up. It's only $8,000 annually you can put in there, right? Now, when it comes to the tax later bucket, which is the pre-tax dollars, 401k, those kind of numbers are similar to what is available in this bucket. The maximum you can put in there is $22,500, right? That's annually, right? And then when we look at the tax now bucket, there's no limitation. You can put $20 million in there, $500, 1,000, $1 trillion in the bank. And the reason being is that since you're taxed in that bucket with capital gains, the government is able to tax as much money as they want on that bucket, right? So then we come and look at this hypothetical case. This is Lisa. Lisa has been working and she's now enjoying a retirement, right? And she's at a point where she has access to $300,000 for her income, right? So what does she decide to do? She puts it in the bucket that is the income taxable assets. So basically, she puts it in her 401k. Now, if we look at this, it ends up that she's going to end up paying $87,000 in taxes. Now, the average life expectancy for women has gone up. It's between 85 and 90 years. Now, assuming Lisa retires at the current age that is set at 67, we're looking at least almost 20 years where she's going to be paying $87,000 of taxes, right? So what do? Can she do better than this? Of course she can. So we advise her to diversify her portfolio. So she spreads her $300,000 across the board. She puts some of it in her 401k. She puts the rest in her bank account, and then she puts the rest in her tax-free assets, which is tax advantage or tax never, right? So when we look at this case scenario, she's reduced her tax liability on this because she only ends up paying $47,000 on average, right? Then we ask ourselves, can she do better? And then we're like, of course she can. She can further diversify her portfolio where she focuses most of her assets towards the tax-free asset bucket, which is what we call the tax advantage bucket, which means this is post-tax dollars she puts in there. And when we look at it, you'll end up seeing that she ends up only paying $18,000 towards her taxes, right? Throughout her retirement, right? So we're looking at the three different scenarios. Which scenario would you prefer? Would you prefer scenario 1, scenario 2, or scenario 3? Please put your answer in the chat and let me know which of the three scenarios would you prefer. Scenario 1, which gives you a tax rate of 28%, which means you're paying $87,000 a year, or 15%, which is scenario 2, which is $47,000, or scenario 3, which is where you're paying $18,000 annually.
We have scenario 3 selected by 3 people.
Great. And these are some of the things that are important. Understanding where to place your money as you're preparing not only for your business, but also for your personal life, right? So we ask ourselves, why pay more in taxes than you need to? Are you making the most out of your tax-free bucket? These are often overlooked assets: the Roth IRA, the municipal bond interests, life insurance, death benefit proceeds, loans and withdrawals. And most of these distributions are generally tax-free, right? So we have a surprisingly tax-efficient vehicle that many people may not know about. It's called the Cash Value Life Insurance Policy, which provides 3 benefits. The first one is a tax-free death benefit. The second one is a tax-deferred growth potential. And last but not least is a tax-free income potential. So let me explain that a little bit more, right? So with this multifunction solution, it has a flexible premium. It's talked about the tax-free growth. We have the downside protection where you don't lose any money, and it doesn't have any impact on your financial aid, right? And you also have tax-free access as well as legal protection. another thing that it does is that it's a very safe investment for you because it's under the protection of the life insurance policy. So you're under that umbrella where your investments are safe. And then another advantage is that it has the death benefit, which is tax-free. And nowadays we have the living benefits, which cover terminal illness, critical illness, or chronic illness, right? And last but not least is the long-term care, right? And the death benefit is up to 120 years. So if you put it in a trust, then it's able to work for you. So if you have let's say now, for example, you have $1 million towards your face value of your policy, you have the option of having $500,000 go towards your long-term care. Now, long-term care, you are able to access 2% of that $50,000 to assist you in case you're not able to do your daily activities of life, like washing yourself, bathing yourself. You know, you become sick and you cannot transfer yourself, you cannot dress yourself. So you have access of that as an insurance of your income to keep going. And especially for business owners, this is a big thing whereby if you're not working, you're not making money. So this ensures that you do have some money coming in, right? And it's when you look at 2% of $500,000, that's $10,000 per month. That's going to help not only take care of the bills, but also help towards paying some of the expenses that are needed to run your business. Right. So not only does it work as an emergency fund, but it also works as a retirement fund because you have access to this money depending on how you fund it, and you can refer to it and be able to use it, right? Like now, and it's also a very good savings fund where you can keep money, and in case you need to get back to it and expand your business, you have funds that are available for you to use. And also it can also be used as an education fund, right? If you have kids you want to send to college, you can use it that way. Or if, you know, technology is fast growing in businesses right now, there's a lot of AI going on, you can use that to pay for some of your employees to be able to get the education they need to keep your business going, right? So now we look at what are the advantages and disadvantages of this particular policy, right? The first advantage is that the crediting interest ability to rise with the index gains without market risk. What that basically means is that since the funds that you put in there are mirroring what is in the market, you don't lose the mark. If the market drops, you don't lose any money in it, right? The second thing is it's a flexible premium. And it also gives you a flexible death benefit, right? And it's also flexible enough whereby everything can be reviewed annually. Like between Philip and I, with all our clients, what we do is we make sure we do 3 months review and an annual review to make sure that we can redesign the policy and also structure the payments to the best of the situation where the business or the individual is in, right? So these are permanent policies that are designed to last your entire life. So it's something that's going to be there consistently and you can work with it, right? And it also, last but not least, it gives you access to cash value. So one of the disadvantages is that if it's underfunded, which means that you're not paying anything above what the minimum required dollar amount is, it may require you to pay additional premiums later on in life, right? So here are the tax benefits that you get from it, right? You get the tax-free death benefit to the beneficiaries. You have the tax-free long-term care rider benefit, which means that if you're critically ill or chronically ill or terminally ill, you're able to access some of that money, and it can help you while you're recuperating or to help you with the medical bills if it is a terminal situation, right? There's the tax-deferred growth of cash value in the permanent policies, right? There's income that is tax-free where you have access to the cash value in permanent policies through policy loans. So let's say now, for example, you have a business of a food truck and you're doing very well and you get all your, you get all your savings and you put them in the policy, and as it grows, your money accumulates in there and you decide, hey, I want to get a second food truck. So basically what happens is that you become your own bank within 3 to 5 years. You just go to your policy, you borrow the money, and you get your food truck. And as the business continues growing, you can pay yourself back. Right? Tax-free withdrawals of cumulative paid premiums. That's exactly what I talked about. Now, unfortunately, if the policy is canceled, you may be subject to taxes on policy gains. So we have to make sure that this is a long-term commitment, that people understand that that is the umbrella that is helping govern all the rules and regulations of this particular policy. So then you ask yourself, how would this work for my business, right? And what we do is we help educate people on how to future-proof your enterprise, right? For example, what will happen to your business when you retire? Do you have a business successor lined up, ready to take over? Will your entire business or share of your business need to be sold? Do you already have a buyer, and what is the price? What would be the consequences to your business, partners, employees, customers, debtors, creditors, and most importantly, your family and beneficiaries if you passed away today? Right? And how do we answer these questions? We use business planning strategies using the life insurance policies that are available, right? We have two of our biggest strategies that we use is the executive bonus plan. We've realized a lot of business owners don't pay themselves, right? So what we do is we have this strategy where you have a business, as a business owner, you use that bonus as a way to pay yourself, right? And then there are also key people in your business who are critical to make sure the business goes. So how do you reward some of these individuals? By giving them a bonus, and that bonus goes into a life insurance policy for them, right? So here's an example of how an executive business bonus plan works. We have this company with John Doe here as the owner, and he has a bonus of $100,000 that he wants to use for his 2023 years annual taxes, right? So this is his tax situation without a bonus, right? His company, ABC Corp, has a taxable income of $350,000, right? So he has a tax burden of $113,050, right? As the owner, John Doe, his taxable income is $75,000. The taxes that he's supposed to pay is $15,495, right? So pre-bonus, his disposable income is $59,505. But between him and the business, the total tax that is due, $128,545, right? So what we do is we push this through to a point where he's going to get a bonus, right? So if we give him $100,000 bonus, right? When we combine that, it will reduce his tax burden by $9,050, right? And his disposable income will increase by $75,294, right? So once again, thank you for listening to me. I'm going to hand this over to Philip. I'm going to stop sharing. Thank you for letting me share.
Thank you very much, Ms. Pauline. Let me go ahead and share my screen. All right. I hope everyone can see my screen. So we've talked about business uses or use cases for life insurance. Now let's look at, why do we want to leverage insurance, or what are the other scenarios where we will need a life insurance plan? So what about our children? So a lot of times as parents, we don't think of, anything bad happening to our kids, but we have children that fall sick, maybe they become critically ill, or, the unthinkable happen. So we as parents, we must ensure that we are ready for all these different things. The potential financial burden that comes with all these issues ever coming up is really dire. As homemakers, we also want to understand the importance and the role in the household which homemakers bring. A lot of times, stay-at-home mom, they sometimes don't understand how valuable they are. If they were to be paid for all the services they render to the home, that's almost $150,000 that they should be receiving every single year. What about single people? Most often, I have friends who are single and they say, "Well, I don't need life insurance." I ask them the question, do you care for your parents? Right? Or do you have family members or nephew or nieces that you would love for them to go to a good school? God forbid you're called too soon. Or would you want to maintain, a lifestyle down the road? And usually they'll say, yeah. I say, okay, then you actually need life insurance. And then what if you become uninsurable? For a lot of people I work with, some of my clients, they have kids that are not insurable. Some of the people that they look really healthy, I come across them and you realize that they are not insurable. So we need to make sure that we do these things while we are still insurable, right? And let me just go here. And for those who, as you get older, maybe you're worried that, hey, God forbid if I'm called too soon, my children will be liable to pay for funeral expense, which is very, costly these days. So most people, they may get just a small final expense policy to offset that cost that was supposed to go to the children, or ensure that the children can, continue to run the business without the need for them to dip into their savings. So this is some of the things that from a business perspective, we want to make sure that they are properly ready, and also from a personal perspective, because I always tell people, personal ultimately influences the business. Some of the questions that we ask, and we see a lot of people, will come across, they'll say, well, should I buy TEM and also save the difference? A lot of people will preach this. And some people ask, why bother with a cash value life insurance policy, especially say maybe a whole life, when you can use a strategy such as, buy TEM and save the difference. So let's take this example. Say for a whole life policy, this person is paying $1,000 every year versus a term policy that they're paying, $200. They can save $800. But the truth is, for this to, actually happen, two serious conditions has to be upheld. Number one, discipline and consistency to save the difference. We already know most people are not disciplined enough to save $200 or $500 or $1,000 a month. Talk less of consistently, putting that money away. And the second thing that has to be in place, knowing how to save the difference. Because if you're just saving at the bank and the bank gives you less than 1% interest, will that money ever grow to become something that you could leverage for retirement purposes or to plow back into your business? Everybody, needs, goals, and responsibilities are completely different. So we must ensure that we take a holistic approach to see how insurance will fit into your overall financial strategy. And another question that we get asked is, doesn't my life insurance through work cover me? This is a very good question, but your employer may provide this benefit. However, they may not allow you to take it with you if you're leaving their employment. And sometimes, even if you can, take it over through Cobra, the downside is when people lose their job or when they're leaving a job, the first thing they don't think about is life insurance at the job. Another question that people usually ask is, why is it so cheap? Why is it so costly? So as we've covered it with Ms. Pauline, there's so many different factors that will influence what the cost of insurance will be, and what kind of benefits and also what kind of fees that you have to incur, with the life insurance policy. If you're getting a standalone or you're adding different riders to the policy, those will also make a whole lot of difference. And when it comes to a strategy questionnaire, this is some of the things that you want to answer. So do you think your health will change as you get older? For most people, that's a yes. Live with my parents and I see today it's a knee, tomorrow is a back, the next day is a head, the next day is a neck. You know, it's just one thing after another, right? And do you have a strategy that addresses your responsibilities? Who will take care of paying debt? If you co-sign with your spouse, if you're not able to bring your own part of the income due to health issues, how will they cover for your debt? If you're not able to work, your income, how will it be replaced for your family? The mortgage balance, how will it be paid? Education for the kids, how will they go to school? Those are very important things that we must ensure that we take care of. And also running up for the business. If you're not there, how will the business run? How will employees be paid? So those are things that we need to plan accordingly. And another question: do you want benefits that may help with your overall financial strategy? And will you be self-insured during your retirement years? For most people, this is not possible. I speak to a lot of people 55 to 66 years old. They don't have anything saved for retirement. And what about consideration for estate taxes? If you plan on passing a huge estate to your kids or your beneficiaries, will they be able to pay the estate taxes that is due on that estate that you're passing on to them? And another question: do you want to pass on wealth to the next generation? I speak to a lot of people who say I ain't giving them nothing. I ain't leaving nothing for those, crazy kids. And sometimes I'm really like, okay, what happened? Where did the disconnect come from, right? So one thing we must ensure is the power of choice. It's important for you to work with a licensed professional. I cannot over stress on this, right? You want to make sure the person represents, well-grounded insurance providers and products. So we work with you, we make sure that the solution is based on your needs. It is imperative. You may have people who are just looking for their own interests. You want to make sure whoever you work with is looking, and ensuring that your needs are upheld. And they also are fiduciary. And we have to utilize an approach that will consider the full and holistic picture, not just one thing. So now that we have financial education, we must choose the plan that's best for our family. So the second part of what I want us to cover now is how your health and wealth intersect. So some of the things we'll cover, I know we touched on, the agenda earlier. I just want to reiterate and remind people for, the second part of this. You will learn the financial importance and impact of your health. We'll also touch on strategies to transfer and preserve your wealth, and then ensuring that your last wishes are prepared and also carried out, and understanding the inevitability and impact of medical expenses on your retirement goals. So, every single person, every one of us, we have a story. And usually it may seem that when it comes to caring for our elders, some stories are a nightmare. Some stories are, very challenging because caring for, our loved ones is not always easy, especially if they're in a terrible health situation. I came to experience this from last September since my parents came here, and it's been a real challenge. Mom has arthritis on both knees, and my dad has a spine problem. My mom also, they just recently did knee surgery for her, and she's also supposed to go for a brain surgery. My dad, fortunately, they administered some, injections, and his spine, it's okay, but it's not all there. I was just thinking, for most people who are not able to see these things, the cost of, healthcare for when you're old, and they are not putting plans in place. If you're a business owner and you don't have those plans in place, what will happen to the business? So, what about if you find yourself in a situation where care has to be taken in a nursing home or a facility? Have you made provisions to be able to pay for that? What about parents or grandparents moving in? How would that impact your ability to continue to run your business or to go to work? Will you need to put your career on hold? What about the constant medical cost of care that comes with it? Will you be able to afford it if you don't plan? And what is your own personal experience? I just shared mine. For most people, this is completely draining their bank account. It's not easy, right? So let's talk about the health and wealth relationship. And I want to make this a little bit interactive. How old do you think the oldest living person is? Miss Pauline, you can look at the chat. So you can put your answer in the chat.
123, 120.
Okay, 123, 120.
120.
So those are 120. They're pretty close. So the oldest living person is Kane Tanaka, who is from Japan. She's 118 years old. And I think as of today, she's older than this because I think this statistics was put together around 2021. So she's probably 123 right now. So she's 118 as of when this was put together. So without help, what good is our fortune to enjoy it? There are so many people in the hospital who have a lot of money, but their health is failing them, right? Likewise, our wealth can greatly affect our well being, and this is very true. Affordability of what we eat. When you go to the store, you look at the price of organic meals versus processed fast food. It's truly alarming. And sometimes I ask the question, how will people be able to eat, organic, food when the prices are so outrageous? Also, availability of options, doctor care, medical expenses, and providers. For most people, they're not able to really pay for health insurance nowadays. So will they be able to get a good doctor to look out for them? And research has linked, faster physical and mental aging with lower wealth. And this is so true. I have some friends who, they're looking like maybe they're my older brother. Some of them are almost looking like my parents who were classmates back in the days, but just due to, life not being fair to them from a financial standpoint. And you see they're looking really old. So you must make the decision. We all hope to live a long life, but the truth is that we can pass away at any time. Life happens so fast. Last week I was involved, well, I can't say a car accident, but all of a sudden my tire just exploded in the middle of the highway on 95. And boy, oh boy, was I scared. So you must take time to develop your strategy now while you're healthy. And it can become too late really fast. So you must ask yourself these things. As I'm building wealth, who will I leave my legacy to? How can I protect all of my hard work? Because you didn't work this hard just to have everything taken away from you or passed to the wrong people. How will I be remembered? What legacy are you passing on? And what impact will I have on the world? These are very pertinent questions that I ask myself almost every single day. What kind of legacy do I want to pass on to my son? And I hope everyone is thinking about these things, right? When we talk about financial foundation, I think you all will remember this from our previous session, right? Where we say, like, building a house, you must build it from the ground up, starting with proper protection. So you must protect your legacy and also the longevity of your wealth. Now, we want to discuss on how we can protection goes through prevention. Number one, having better health can cost you less in retirement. Let's think of how much the cost of just X-ray is. And this was as of 2018. Just a normal X-ray is from $250 to over $400. The medical cost that is associated with arthritis, that's $2,117. And this is very true. Just physical therapy every week, three times a day, 3 times a week, is $300, $100 each session that I pay for my mom. Right? So the cost is it's true, and it's going up by the day. Medical costs for people who have obesity was over almost $1,500, higher than those who are normal weight. What about coronary bypass? Over $150,000. One of the biggest challenges that retirees face is running out of money. And usually the number one reason why people are filing for bankruptcy is what? Can you guys help me with the answer in the chat? Miss Pauline, anything?
Medical bills, job loss,
Mm-hmm.
excess use of credit card.
Okay. So the right answer is medically related cost. Right. And according to an academic research study, it's seeing that over 66.5% of all personal bankruptcy cases are due to medical expenses and also healthcare related costs. And this is really alarming. Let's look at the cost for a retiree. How much will the average healthy 65-year-old couple in retirement will leave up to the age of 87 for a male and 89 for a female need for medical expenses? What do you all think? Will it be A, B, or C?
B.
B for 29.
A.
Okay.
Another B.
All right.
Haven't gotten anything yet.
Okay. The answer will shock you. It's actually C, over $606,000. And that's nearly double since 2018's estimate of over $363,000. And I think as of today, 2024, this thing will be going close to almost $750,000. And it's not relenting, the speed. And I don't want you to let these expenses reduce your nest egg and livelihood. You must ensure that you protect your wealth. Now, let's talk about Medicare, Medicaid, and MediWhat. The first time I was hearing all this, I was like, what does this even mean? Right? So Medicare is your health insurance when you turn 65 and after. And this is provided by the federal government. And Medicaid is for certain groups of individuals that is based on strict income and asset requirements. So you have to be a low income family. They have to be either a qualified pregnant woman or children. And for the assets, you have to exhaust your assets before you can qualify for Medicaid, right? So qualifications and benefits will usually vary based on the state you are, and they may have different names. In California, it's called Medi-Cal. In Massachusetts, it's called Mass Health. Then what about Medicare Supplement, otherwise known as Medigap? This is the insurance to help cover out-of-pocket costs that are usually not covered by Medicare. That's where Medigap or Medicare Supplement comes in, right? So let's look at Medicare. Unless you're still covered by your employer's health plan, you have to enroll in Medicare before you can get any additional private Medicare supplement coverage. So while Medicare is a primary health insurance for seniors, do you think that it covers all your costs? Absolutely not. So there are different parts when it comes to Medicare. We have Part A that helps to pay for hospital visits, inpatient care, and is free for most people. Then Part B will help pay for doctor visits, any outpatient care, and this is not free. The standard monthly premium range from $148 above. It depends on your income. This is as of 2021. I think as of today, it has gone up to over $180. And the Part D is insurance for prescription drugs to help lower for the cost. So Parts A and B are usually known as the original Medicare, and these are provided by the federal government. Part D is obtained through a provider, so you have to pay for it. So when it comes to applying for Medicare, you must know when to apply. This is very important so you can avoid paying potentially higher premiums due to you enrolling late for the program. Now, the initial enrollment period, we have a total of 7 months. 3 months before your birthday, before your birth month, and also 3 months after your birth month. That is when you have to enroll. So let's look at this. An example, say your birthday is in July. So you have April, May, June, and then August, September, and October that you can enroll for, Medicare. So if your birth month is in the month of May, when is your initial enrollment period? What do you think? Let's get the answers in the chat.
February.
February.
A.
Okay.
C.
All right. So the right answer is February to August. Remember, it's 3 months before and 3 months after, right, that you can enroll. So other enrollment periods are usually available if you're not able to apply during your initial enrollment period. But there may be some, challenges or limitations to this. So are you covered or not? Unfortunately, Medicare doesn't really cover everything. and you will be truly surprised to learn which items or services are covered and which are not. So what do you all think? Are yearly wellness visit covered? Yes or no?
Yes.
What about most dental care routines, visits like cleanings, fillings, dentures?
Yes.
That's a no. Eye exams related to prescribing glasses?
No.
That is correct. What about cardiovascular disease screening?
Yes.
That is correct. What about hearing aids and exams for fitting them?
No.
That is correct. What about physical therapy?
No. No.
That is a yes.
Oh, there's a
So,
yes in between here.
okay. Then what about long-term care, which is also called custodial care?
No.
Absolutely not. What about chiropractic services? That's a no.
No. No. No. Oh, somebody said yes.
Okay. What about medical care overseas? Does Medicare cover that?
No.
That is a no, right? So thank you guys for being a good sport. So after you enroll in the original Medicare, which is Part A and B, you have two options for additional coverage. You can go with Medicare Advantage or Medicare Supplement, or otherwise known as Medigap, right? Usually the cost will vary depending on what plan you're getting and coverage and also the services that you use. So that will make the difference in the cost. So now let's talk about Medicare Advantage. Medicare Advantage is also known as Part C, and it combines both the Part A, which is a hospital, and Part B, that is medical, into a single plan. And it will usually include a Part D, right? So, in general, after your Part B deductible has been met, you are then responsible for the 20% of the Medicare approved amount. Remember, it says approved amount because it's not everything that they will approve. So for $100 Medicare expense, paying $20 is not bad. But when you think about a bill that is $50,000, will you be able to pay that 20% on that $50,000 bill? And how will you pay for it? Will you have to use a credit card? Will you deplete your retirement fund? Or will you need to rely on your children to help cover the costs? God forbid you find yourself in that situation, right? So for those who are looking to cover more, planning for future need, there is what we call the Medigap. And this is the insurance plan that will cover the out-of-pocket cost that the original Medicare does not cover. So things such as deductible copay, co-insurance, and also travel outside the United States, right? So original Medicare, which is Part A, Part B, and usually has Part D included. It will cover medical expenses. The Medicare supplement, the part that the original Medicare doesn't cover, Medicare supplement will usually cover. So some of the things that we have to know when it comes to Medicare supplement, the basic benefits are normally standardized amongst all plans. So benefits, whether it's from plan G in one company, will be the same from another company. So you want to be able to shop by price because the plans, they usually have all the underlying functionings. The benefits are usually the same. The second thing, policies are guaranteed renewable. So even if you have health problems, your policy cannot be canceled as long as you continue to pay your premium. And the third thing is, it does not cover long-term care needs, such as, nursing facility stays, and it doesn't cover vision or dental, hearing aids, eyeglasses, and also private duty nursing, like we discussed. What about long-term care? So I want us to continue to talk about costs and expenses as it does relates to our potential need in later years. So when we look at Medicare, Medicare and Medicare supplement, they can address medical and hospital related costs, but they do not pay for most long-term care services or personal care. So let's take this example. So we have Mary who broke her hip in a biking accident. After 3 days in the hospital, she was admitted to a skilled nursing facility for which Medicare covers up to 100 days, right? So for days 1 to 20, her responsibility is zero. So days 21 to 100 is 185 and 50 cents co-insurance per day. So from days 101, all the cost has to be borne by Mary. So will she be able to afford to continue to pay for this? So what can address this cost that Medicare and Medicare supplement do not address is long-term care insurance. Now, I want us to focus on what long-term care insurance is. So long-term care is the personal and medical care needed if you become disabled, whether it's due to age or adverse health conditions. For example, if you're not able to perform any two of, the following activities, I call them activities of daily living, otherwise known as ADLs. You're not able to bathe yourself, dress yourself, eating, right? Feed yourself, go into the bathroom by yourself, be mobile. Then long-term care kicks in. And I don't want you to be surprised if someone you know needs or has needed this type of help. And it is very expensive. Most people don't know this. And statistics have shown that 70% of adults who live up to age 65, they develop a severe need for long-term care. So if you find yourself in this situation, how will you be able to afford to pay for long-term care? And long-term care is often usually associated with older people, but the truth is illness can happen at any age. We have over 48% of adults 18 and older, they receive some sort of long-term care benefit in their lifetime. While I was teaching a class at Morgan, one of the students mentioned that, hey, my daughter actually has been on long-term care for a long time, and it is very, very expensive. So I never knew that that's how much it will cost me. So for most people, they've experienced this, and some people are actually still experiencing it. And for most of them, they've completely depleted all their savings and they're relying on credit card. So if that is your situation, how will you afford to pay? Let's look at some of the costs of long-term care, right? So this is just the average cost of certain services that are usually associated with long-term care. So for adult daycare center, $68 a day is over 17,680, annually. What about if you need a homemaker service? That's $20 per hour. And this statistics is as of 2021. After COVID, everything skyrocketed up. Right? Look at what the cost is for a nursing home private room. That's $253,000 a day. And annually is over $92,000. Most people don't make $92,000 a year. Right? So it is a big challenge that we stand to face, in the near future. And how do we access long-term care? So long-term care can usually be obtained as a standalone policy, or you can buy it as a rider with your life insurance policy. You'll remember Miss Pauline was talking about, the life insurance policy. What are the different components that it comes with the long-term care, living benefits such as chronic illness, terminal illness rider, and all that. You can also add long-term care as part of the rider to your life insurance policy. And those policies with a long-term care rider, they will allow you to be able to access a death benefit up to a certain percentage, or the IRS daily HIPAA rate, which is over $380 per day. That is over $11,558 a month. So what does this mean to you? So even if we go back here, you see that if you have that long-term care that is paying you $380, you are able to get nursing home private room. So you can get the best care if you have coverage. HIPAA rate being $380 a day, it means you can pay all of it and still have some money left over. So it is imperative that we position ourselves to have this kind of, these are priority things that we must take care of. So now let's look at thinking about care. Being now aware of the types of care, I want you to think about this. What would you want for your mother or father or for yourself? Are you financially prepared for it? And do you know if what you have fits your needs? Take a moment. Imagine the effect of this cost on your retirement savings and assets. Will you need to sell your business to be able to afford? Will you need to sell your home to be able to pay for this cost? So it is imperative that we position ourselves. I can't overstress the importance of this. So now let's talk about this picture. I always say life is all about choices. The kind of future that you choose will determine what kind of work that you want to put in. When I was, doing research to put together the slides, I saw these two pictures. This is about retirees, but we see the stark difference. This couple, they're on the bench, and this one, they're having a really nice breakfast. What is the difference? Are you ready for retirement? What goals do you have for retirement? How do you envision spending the time, during retirement? Would you want to retire here, say in Maryland, or would you want to retire in Alaska where the, state tax is, about 4.3 or is 4.9, which is lowest? Will you want to retire abroad, right? Have you considered what will be the impact of inflation on your retirement savings? Do you have any pensions, annuities, or other retirement plans that will help fund your retirement years? Right? What saving strategy do you currently have? And when you're saving for retirement, what do you have and how much do you know about it? Most people, they may have a 401k through your job. I asked them, out of that money you have in your 401k, say you have $1 million, how much of that $1 million is truly yours? How much of it belongs to Uncle Sam? If the market goes sideways, where does that leave you? Right? What is your understanding of what you have? What about estate planning? Have you taken the time to name beneficiaries for your retirement accounts, your life insurance policies, and other assets? There's some people, they've been divorced, but they still have their previous spouse as their beneficiary, and they have never taken the time to make changes. And some people, they've had, new kids, but they haven't updated their beneficiary list to reflect that that new person is also to benefit, from their, whether it's a retirement plan or life insurance policy or annuity contracts, right? What are your estate planning goals? Do you have a will? Do you have a trust? Do you need to transfer, a deed of your home into your trust? So if somebody sues you, they don't have access to get that. And have you taken the time to consider what will be the potential tax impact on your estate, right? What about power of attorney? If you have young kids, have you taken the time to set up a guardianship document? Who will take care of your kids, God forbid, if you and your spouse are not there? So these are pertinent things that we must prioritize and take care of it today. Procrastination is not a financial plan. I always say this. So in summary, we can preserve and transfer our estate at any, size. You must take the time to develop a strategy now. That is what makes all the difference. We look at the health and wealth relationship. We understand that this can greatly impact your financial future. And while we have our health, we must take the appropriate steps and actions to develop a strategy that will help us build, maintain, and also transfer what we've worked so hard for. What kind of legacy will you pass to your loved ones? Will it be a legacy of debt or will it be a legacy of wealth? On that note, I want to thank you all. I'll, bring us to question and answers. If you have any questions, please let us know and I'll be very happy to answer that. And you can scan our barcode to get our contact information. I want to thank you all for taking the time to listen to us today. And we do offer complimentary, one-on-one consultations if you're interested. It's completely free and no charge to you. So thank you all so very much. Once again, my name is Philip Ndeska, and with my partner, Miss Pauline Chiako. I thank you so much for giving us the opportunity today. Thank you.
We will wait just a few minutes to see if anyone populates any questions in the chat, Philip.
Okay.
Says scary stuff. I guess that was in reference to understanding a lot of this information that most people don't get used to. And we have thank you and SBPO for this learning opportunity.
Well, this is Michelle. I definitely want to say It is scary, right? Now I'm gonna tell you something. I'm sitting here and I'm listening. I'm like, oh, well, could I answer that? Or did I start? I'm gonna tell you, it is scary, but it's so educational. The things that you went over, Philip, especially at my age, I'm like, I really need to kind of really do better because I'm not as good as all the stuff you were listing. Do you have this in place? Do like, you're right. I don't have a lot of those things in place. I need to talk to my grown kids, right? Just to have that conversation so that they know, okay, if something happens to me, this is things I want done, right? Who do I want responsible for what? Or, so I'm gonna tell you, it's scary, but it is so, so good to get this type of information because, we just go, hey, we just go to work and go home. We just go to work, we don't really, we think about it, but we don't take action. And having you guys really put this in front of us makes you think about, wow, I need to put this in the front instead of in the back of my thoughts, and how I'm moving forward, how I want to live, like you said, for retirement and things of that sort. I hope our guests have really, really got some good information, not just for their businesses, but for their personal lives out of this excellent presentation that you and Pauline has given us today, because it is needed. And so you were here before, and I'm going to say it again. I want you guys to come back. We definitely want to enrich and ensure that the audiences, that the people that we're talking to can understand this important information that you guys have put together, because it is desperately needed. Pauline, have you seen any more questions populate in the chat?
No, it's just comments that are on here.
Okay.
Maybe I can read a couple of them. Says, the presentation has been extremely informative. Thank you. Yes, talk about moans and groaning. Yes, Michelle, good information, a wake-up call again. This was a great presentation. Yes, and I am rich in spirit, but kind of broke financially after putting everything into my business. Very informative. Then you absolutely made my day. And the one more says, please include Philip's contact information.
I just sent my email and phone number.
Well, like I said, I do want to invite you guys to come back, yes, because look, I'm thinking now about my own personal affairs that I need to start doing the check off list to get in order, because I'm like, ooh, I can think about a lot of that. So it is very educational, whether on a personal basis or whether for your businesses and everything, we will be sending some information out to those who attended today and stuff, because we definitely want to ensure that they have your contact information, and get with you guys, because, it's scary, but it's also extremely important. I want to also take this time not to just thank you guys, but I want to thank my small business programs team, who does such an excellent job, connecting us with excellent speakers like yourself. We have Marlo and Liliette and Michael and Shanae in the backgrounds who help us and support us in what we're trying to do to educate our small businesses on things that can make and help their businesses to grow. So I hope that you were able to learn some important information today, like I said, both personally and for your business. We do look forward to seeing you, at our next outreaches and things that we have. I also want you to please understand that certification is key, and we are asking that you please be certified with WMATA. We do have contracting opportunities on both the federal side and our non-federal side. Please visit our website. Certification is a key to participation. We look forward to your applications coming in. And I just want everybody to just have a great rest of your day. I want to just clap for the presenters today. Philip and Pauline, thank you so very much. And we will see you guys at our next outreach. Take
Thank
care
you.
and have a great rest of your day.
You too. Thank you so much.
Bye-bye.
Thank you for having us. Bye.
Bye-bye.